Namaskaram. So we have started discussion on tax audit under section 44AB and we are done with applicability till yesterday. So today we will just go through it quickly and we will start with the today's discussion. So you know that every person who is having income under business or profession, meaning thereby tax audit is not applicable for person who is earning salary income, house property income, capital gain income or income from other sources. It is only applicable if you are having business or profession. That too, if you are a person whose turnover is more than 1 crore, then tax audit is applicable in case of business. If you are in a profession, notified professions like doctors, lawyer, engineers, architect, company secretary, chartered accountants, cost accountant, then if your turnover exceeds 50 lakh, then tax audit becomes applicable. Next, if you are a presumptive assessee covered under 44A, that is GTA or 44 double B and triple B, this is for non-resident who are having either power setup in power plant in India or turnkey projects in India. For them we are having presumptive scheme. So if you wish to declare lower profit than the deemed profit, then tax audit becomes mandatory because government wants to clarify whether the government wants to make sure whether you are actually having lower profit or not, because according to them that should be the minimum, the deemed profit should be the minimum profit that assessee should show to the department. Next is very much interesting section 44 AD and 44 ADA. 44 AD is applicable if you are having business turnover up to 2 crore. 44 ADA is applicable if you are having business turnover up to professional turnover up to 50 lakh. Here, the margin is either 8% or 6% of the turnover, and in 44 ADA, margin is 50%, minimum 50% government demands. If you wish to declare lower margin than this and you are having income more than your total income is more than basic exemption limit, then tax audit becomes mandatory. So this 1 crore rupees will be replaced by 10 crore if total receipt and total payment during the year does not exceed 5% of total receipt and payments during the year. So whatever you have received in cash is less than 5% of total receipt, and whatever you have paid in cash is less than 5% of total payment. In other words, more than 95% transaction both on the receipt side and payment side was done by banking channel, then definitely the tax limit, the tax audit limit will be increased, enhanced to 10 crore rupees, and then only your tax audit becomes mandatory. So these are the things, and then we have discussed these practical questions also, case studies also, where we have discussed the applicability of the 44 AB. Now today's discussion we are starting with the explanation with this particular section. Accountant shall have meaning as explained under section 288. Accountant means chartered accountant. So we will have the who can do the audit. So for time being now, here a tax audit can be done only by chartered accountant who is having certificate of practice. So CA along with COP. So CA who is under employment cannot do the tax audit. CA final student cannot do the tax audit. There is something called GDCA we have in Maharashtra. They do the government diploma for cooperation and accountancy. That is government diploma in cooperation and accountancy. GDCA is a profession. They become the tax consultant or they become the auditor of cooperative societies. They can become the auditor of class B and class C cooperative societies, but they cannot do the tax audit of those societies. For tax audit, they have to get it done from the chartered accountant who is having certificate of practice, because only that person is eligible to conduct the audit. Specify date means date before the tax audit should be done, and that date is written under section 139(1). 139(1) due date you already know. For tax audit, for normal return the due date is 31st July, okay, which is already gone now. So 30th September is on the way. So 30th September is the due date for submitting the audit, and for audit return which is based on the audit should be submitted by 31st October. By 31st October. These are the due dates. So due dates means, or specified dates means dates which are mentioned under section 139 subsection 1. Okay. Here they are writing the same para again. If you are exceeding turnover more than 1 crore, then you have to get the audit done by the chartered accountant. And if you are a professional, then your audit becomes mandatory when you cross the gross receipt 50 lakh. Again, this para comes So whenever you are declaring the income under section 44 A, BB and triple B lower than what is mentioned in the section, then tax audit becomes mandatory even if your turnover does not exceed 100 lakh. That means even if your turnover is less than 1 crore, but you want to declare lower profit margin, you have to get your books of accounts audited. Same thing goes under 44 AD and see, same things goes for 44 AD and ADA. If you wish to declare lower profit, then you have to get books of accounts audited. All these paragraphs are explaining that only. Later on in lectures, we will discuss the application of Rule 6G, which will give you the forms format, like what should be the format of Form 3CA when the books of accounts are already audited by some under some other statute, like company's books of accounts is already audited. So as a tax auditor, you don't have to be much worried about it. And 3CB means books of accounts are not audited by any other auditor under any other statute. That means you are having dual responsibility now. Here you have to talk about true and fair view on the financial statement, as well as a true and correct view on the tax computation. So the responsibility under 3CB is higher than the responsibility which is given in 3CA, because in 3CA already audit is done. So we will discuss about it later on. I'm just telling you what is written here. Whether you are filing 3CA audit report or 3CB audit report, a questionnaire in form of 3CD has to be submitted. And probably you people are watching this lecture to understand the 44 clauses which are given under 3CD. So for that we have separate series of lecture altogether. Right now we are creating a background, a foundation for 3CA, 3CB and 3CD. Actually we have to discuss these three only, but we are just trying to build up a environment in which we are going to discuss these three forms. So sometime a chartered accountant needs to issue a certificate or report under section 80IA, 80IB, 80IC or etc. This type of sections. We call these sections as profit linked deduction sections. These are the profit link deduction section, and one of the criteria government here says, okay, whatever is your PGBP, say for example, you are a Reliance Infra and your profit for the year is a 10,000 crore, whole 10,000 crore will be allowed as a deduction under 80IA. Whole 10,000 crore will be allowed as a deduction under 80IA. That means your taxable income, total income will be nil. Now please understand, government don't want to give deduction which is of 10,000 crore blindly. So government says, even though if your statutory audit is done, even though your tax audit is done, a chartered accountant should do the specific audit of this particular section's applicability and whether you are complying with the conditions or not. So this is a separate audit altogether. So yeah, they are giving the explanation before issuing the certificate under this law. Okay, you have to submit a report, and for that a CA can do the additional audit for before issuing the certification. That will be section wise. Please understand, whatever section is applicable, 80IA, 80IB, 80IC, 80IAB, 80IBA, there are so many sections in this series. But yes, before issuing the certificate, a CA can do the separate audit. That is written here, which is necessary also. This lecture is meant for discussing the turnover criteria, how the turnover should be computed, computation of turnover. That is the primary agenda in this particular lecture. So look at this particular case study here. Concession Limited. Now Concession Limited is a company, and when I say company, company will be liable to get tax audit done only when their turnover exceeds 1 crore, and if they are doing the banking transaction more than 95%, then for them turnover limit will be 10 crore. Okay, so only two conditions are there. So that lower deduction of profit under 44 AD and all, 44 AD, ADA, all those sections are not applicable to the company SSC. Please understand. Okay, so it is engaged in a business of manufacturing of thread. So manufacturing company, a company is expecting a record turnover of 10.13 crore. Definitely tax audit becomes mandatory during the financial year 21-22 before adjusting the following. Now let's look at the data. Okay, we need to know what we have to subtract and what we should not subtract from the turnover. So this is the turnover that they are expecting, 10.13, and which is a threshold, which is nearby threshold. Please understand, discount allowed in the sales invoice. So question is, should you subtract this or not? Just give the answer, and I will give you the answer after some time, but you should give the answer. should I subtract this trade discount from the turnover or not? This is first thing. Then there is a cash discount. What do you mean by cash discount? Sir, trade discount means somebody who gives the discount while issuing the invoice only. That is for increasing the trade. Cash discount is once sale is done and you have given the 45 days ka credit period. Okay, there is a credit period of 45 days and you are encouraging associates. If you pay within the 10 days, if you pay within the 10 days, then I will give you 1% additional discount. That is cash discount. Should you subtract cash discount? That is another question. Then there is another trade discount. Okay, trade discount that will business discount. Should you subtract that? There is a commission on sale. Should you subtract commission on sales? There is a sales return which is not related to current year, but it is related to some past year. So should you subtract this? There is a sale of investment. This is definitely not a business transaction. Should you subtract that? This is another question. Okay. You are required to ascertain effective turnover in the of the for the prescribed limit for tax audit under relevant act and guide the company with the provision relating to tax audit applied. This is the question. Now let us understand the answer and then we will try to create. Then we will come back and understand what exactly needs to be subtracted or not. So who has given answer here? The answer is not written in the law. If you go and read 44AB, you will not find any explanation on turnover. So it is the responsibility of Institute of Chartered Accountants of India, Institute of Chartered Accountants of India, which is our mother institute. A mother can guide its members. So mother have guided members by issuing a guidance note, and that guidance note becomes mandatory for us because we are the children of the institute. So we have to follow whatever is said by the ICAI. So in case of confusion, the last resort that we go and we ask question to the ICAI, whatever clarification ICAI gives, we consider it as a law. Actually, it is not a law, but for us, it becomes a law and we have to follow that guidelines thoroughly. So let's look at that guidelines which gives the explanation on turnover. What exactly is a turnover for the tax audit threshold limit? The provision relating to audit under section 44AB of Income Tax Act 1961 applies to every person carrying on the business if total sales or the turnover or the gross receipt exceeds 1 crore. So this is the basic condition of 1 crore that you are supposed to write. Provided that in case of the person whose aggregate of all amount received including amount received for sales, turnover, gross receipt during the previous year in cash does not exceed 5%. So they are writing the 5% criteria. Then the limit will be not 1 crore, the limit will be 10 crore. Okay, so I'm not reading that part. In case you are a professional associate, then limit is 50 lakh. So all this they have written the law. But what is the turnover is not defined in the act. What is turnover is not defined in the act. So we have to derive the definition from the guidance note issued by the institute. Okay. So let's look at what should be excluded and what should not be excluded from the turnover. Remember, the thumb rule is whatever is the trade discount, whatever you consider as a trade discount, business discount. See, if discount is written in the invoice, then we have to subtract. Even in GST law, if you follow section 15 subsection 3, valuation, okay, GST law, GST Act, CGST Act, if you go and search section 15 subsection 3, there also you can see a condition. If in invoice only you have shown the discount, then it must be subtracted from the turnover. Definitely you are not charging the discount. You are not charging that much amount from the as a consideration from the party. How can you consider it in the turnover? So this is one type of discount. Sometimes what happens, we give the quantity discount. If you buy 1000 quantity from us during this next 3 months, we will give you 3% additional discount. So that discount is not shown in the invoice. That discount you will show later on, but there is the agreement which was in existence. So this is also a trade discount. So whatever is the trade discount, we should subtract. Cash discount we should not subtract because that is not forming part of your turnover. Please understand. So discount allowed in sales invoice. Something which is allowed in sales invoice, you must not consider. It won't be considered only. We are just giving the explanation, highlight over it. Something which is subtracted from the invoice. If you go to Big Bazaar, you go to the DMart, you go to any shop, discount will be mentioned in the invoice itself. Obviously, that is not part of their turnover. It won't be considered for GST also. So discount allowed in the sales invoice will reduce the sale price and therefore same should be deducted from the turnover. Okay. So discount, whatever discount is shown in the invoice, we should subtract it. Cash discount, we should not subtract the cash discount. No, we should not. But sometime what happens in small shops, what happens after preparing the invoice is prepared for 1,000 rupees as a as a matter of negotiation. Last negotiation you are saying, uncle, please reduce at least 50 rupees from this. So though the invoice was prepared for 1,000, the poor fellow have received only 950. So invoice was issued for 1,000, but the actual amount that he has received is 950. So what he will do, he will either give you the revised invoice immediately, he will cut the 1,000 rupees and he will write the 950 and he will put the signature, or he will issue a cash memo immediately that okay, on counter you should charge only, they should charge only 950, not the original 1,000. So cash discount, otherwise it is allowed in the cash memo or sales invoice, in the nature of financing charge and not related to turnover. Therefore, it should not be deducted. Please understand. If it is shown in the invoice, it has to be deducted. If it is not shown in the invoice, then it should not be deducted. Cash discount we ignore. Turnover discount is normally allowed to the customer if the sales made to him exceeds particular quantity. So it is a quantity discount. As a trade practice, it is in the nature of trade discount and this should be deducted. So the moment you see it is a trade discount, quantity discount, it should allowed as a deduction. There are sometimes special rebate which is allowed. Special rebate means year-end sale, the product which is about to expire, they will give you some additional rebate on that. You are a cake manufacturing company, you know that cake is already about to expire. Instead of taking it back and destroying it, you will provide additional discount on that. So special rebate allowed to the customer can be deducted from the sales if it is in the nature of the trade discount. Obviously, if it is a trade discount means what? The whole industry is doing that. It's a very normal in your industry to provide that type of discount. So even special rebate will be subtracted. Okay. If it is in the nature of commission on sales, this cannot be subtracted. Commission cannot be subtracted. Commission you should debit. So please understand, if it is your profit and loss account, your turnover should be on credit side of the P&L and commission should be on debit side of the P&L. So commission cannot be subtracted from the sales. Okay. Next. Price of the goods returned. Price of the goods returned. Please understand, sales return must be subtracted. Now, one of the doubt which comes to the industry, which return? Exactly which return? Return during the year or sales of the quantity which was sold during the that came return? What about the last year's return? What about last to last year's return? What about 3-year-old return? Any year. Please understand, here guidance note has not put any limitation on that. Any sales return should be subtracted. So whether it is related to current financial year or past financial year, a sales return has to be subtracted. Okay. Sale proceed of any shares, securities, debentures held as the investment will not form part of turnover. Obviously, sale of investment is not your main business. It cannot be. It is a capital gain item. It cannot be form part of turnover. But sir, what if I'm an investment company, I'm a mutual fund, then definitely for you, the securities are forming part of stock in trade. And for you, the turnover itself is the sale of securities. Then that we have to consider. Normally, we should not consider. Okay. So in the given case, now in the given case, we have to consider again. So this trade discount we should subtract. Okay. Cash discount we should not subtract. Okay. Trade discount again we should subtract. Commission on sale we should not subtract. Sales return we should subtract. Sale of investment we should not subtract. Okay. So look at this. In the given case, the turnover we have to check. Okay. The gross turnover was 10 crore 13 lakh. From that trade discount which is shown in the invoice, we have subtracted. The generic trade discount we have to subtract. Sales return also we have subtracted. And after providing this adjustment, your still turnover is 10 crore 30,000. It exceeds the threshold limit, and that's the reason tax audit becomes mandatory. So the assessee company here has to get books of accounts audited. I hope you understood the turnover criteria here. In the next lecture, we will discuss about who is auditor.